Jia hao, as they say in China. Welcome to the video. So, I think it was last Wednesday, January 20th, this interview came out with Peter Schiff where he calls Bitcoin a bubble. And in this video, I'm going to demonstrate how Peter Schiff has been calling Bitcoin a bubble for the better part of a decade and how he consistently makes contradictory statements about Bitcoin. So we'll start off listening to some of the article now.
So I think this is just a short-term phenomena. I think gold is getting ready for a tremendous move because in reality, if you're worried about inflation, gold should be the main commodity that you buy because as inflation pushes up the price of all commodities, it's hard to store wheat or corn or oil or, live cattle. So if you think you need these commodities in the future, it's not that easy to stock up on them today. But what is easy to stock up on is gold. And gold is a store of value. It has historic relationships to all these other commodities. So if you're worried about a big increase in prices because of the valuation of money and you want to protect your long-term purchasing power, you would be buying gold. So gold should be reacting even faster than other commodities. And so it hasn't thus far, but I think it will.
I know what you're thinking. I'm going to say it for you. Gold hasn't risen because what Bitcoin has risen, right? Is that the other answer that you were thinking, or no?
Well, I don't know how much buying that might have gone into gold went into Bitcoin instead.
Yeah.
I think it's, very little, as far as the size of the gold market. Maybe it's significant to the Bitcoin market, but I think it's kind of irrelevant to the gold market. What I do think may be happening, though, with the Bitcoin story, which is centered on the false belief that Bitcoin is digital gold and is going to replace gold. That's, part of the spiel that they use to try to sucker people into buying it, right? That's the Bitcoin story, that Bitcoin is gold, but it's nothing like gold at all. It has absolutely nothing in common with gold.
So Peter says that Bitcoin has nothing in common with gold. Well, let's take a look at this article from Investopedia.com. In one quote, it says, like gold, there's a limited amount of Bitcoin. Satoshi Nakamoto, the creator of Bitcoin, limited the total supply to 21 million tokens. Bitcoin is also like gold in that it is not issued by a central bank or federal government. This is Investopedia.com. Down here, they compare the two. First, transparency, safety, legality. Gold's established system for trading, weighing, and tracking is pristine. It's very hard to steal it, to pass off fake gold, or to otherwise corrupt the metal. Bitcoin is also difficult to corrupt thanks to its encrypted, decentralized system and complicated algorithms. Rarity. Both gold and Bitcoin are rare resources. While we know that there is only 21 million Bitcoin that exist, that should actually say will ever exist, it is unknown when all the world's gold will be mined from the earth. Yes, we know that there is a finite amount of gold. I don't think more gold can actually be created, but we don't actually know how much gold there is in the earth. And unlike Bitcoin, if the demand for gold increases, the amount of mining that is done for gold can be increased. And it goes on to say there is also speculation that gold can be mined from asteroids, and there are even some companies looking to do this in the future. Yes, I believe I read an article, I think it was last year, that said they discovered this asteroid that had enough gold in it to make everyone on Earth a billionaire, looking at baseline value. In addition to ushering in a new focus on blockchain technology, Bitcoin itself has tremendous baseline value as well. Billions of people around the world lack access to banking infrastructure and traditional means of finance like credit. With Bitcoin, these individuals can send value across the globe for close to no fee. Liquidity. Both gold and Bitcoin have very liquid markets where fiat money can be exchanged for them. So there you have it. That's from Investopedia.com on the similarities between gold and Bitcoin.
But to the extent that some people that really don't understand what gold is, who maybe are in the institutional space, maybe they would be buying gold. But because they believe that maybe gold's future is being impacted by Bitcoin and that, well, maybe gold won't go up because Bitcoin will steal its thunder, it's possible that some institutions that otherwise might be buying gold maybe are not doing it. I don't think they're buying Bitcoin either.
So Peter Schiff thinks that institutional investors are not buying Bitcoin. I guess he thinks that retail investors have driven the price well past $30,000. Now, I do think that retail investors are capable of pushing Bitcoin to prices like this, but let's take a look at some articles from the past couple of months. Here's an article from November 9th, last year. JP Morgan's analysis shows institutional investors moving from gold ETFs to Bitcoin. The article states, JP Morgan has highlighted evidence of institutional demand for Bitcoin and investors moving from gold exchange traded funds to the cryptocurrency. The firm points out that Bitcoin demand is driven not only by younger retail investors, but also by institutional investors such as family offices and asset managers. In an article on Investopedia.com from December 10th last year, entitled Gold Will Suffer as Bitcoin Catches On, JP Morgan. And it says, a new note from strategists at investment bank JP Morgan has warned that the value of gold will suffer as institutional investors move funds away from gold and into cryptocurrency funds. According to authors of the note, which lays out a bullish case for cryptocurrencies, gold will face a structural flow headwind as investors shift allegiance and money to Bitcoin. Here's an article from EFTtrends.com. In the article it states, I've seen numerous market experts, air quotes, declare this another crypto bubble similar to 2017. But unlike then, the current run-up is driven not just by retail investors, but also big-name investors, institutions, hedge funds, and more. Those include people like billionaire investor Paul Tudor Jones, who's buying Bitcoin in response to unprecedented money printing, as well as firms like Massachusetts Mutual Life Insurance, which purchased $100 million of the digital currency earlier this month. And this was from Christmas Day. And in an article from November 24th last year, entitled Bitcoin is a better investment vehicle than gold and institutional investors buy it. The article states, more corporate investors turn to Bitcoin as Grayscale reports over $1 billion added to its cryptocurrency funds in Q3 2020. And we've already covered the second part here, but this was back in November, and Grayscale hasn't slowed down a bit in buying Bitcoin. I was watching Crypto Lark. He talked about, I think just yesterday, Grayscale bought, I can't remember if it was, I think it was like 8,000 or 9,000 Bitcoin. And just remember, currently with the reward at 6.25 per block, so that means only 900 Bitcoin are being created each day. Grayscale just bought up about 10 days worth in one day. Just Grayscale. And finally, here's an article from back in October of last year. It says, Bitcoin versus gold. Where are institutions putting their safe haven money? Take Kraken's June 2020 report. The crypto exchange noted on 8 September that Bitcoin's rally to an intra-month high of $12,480 coincided with Nasdaq's tech giant MicroStrategy buying $250 million of the cryptocurrency. 2 weeks later, the mobile app firm doubled down, purchasing a further $175 million of Bitcoin, taking its total holdings to 38,250 BTC. But according to Peter Schiff, institutions aren't buying Bitcoin. Okay.
But to the extent that they think Bitcoin may replace gold, it may be a reason why they're not buying gold. And so maybe they're buying some other commodity, or maybe they're buying stocks or something else. But ultimately, Bitcoin is going to collapse, and any demand that it might have siphoned away from gold is going to return to gold. I mean, the Bitcoin story, it's one of a bubble. It's, a modern day tulip mania. It's fool's gold. I've said that from the beginning.
Yes, he really has been saying that from the beginning, and for a long, long, long time, he's just been completely off the mark. And you'll see what I mean when we go through these next 4 articles. Just going to go through them real quick. The first 2 are from the same day, October 29th, 2020, when the price of Bitcoin was starting to go up. That's when it was first starting to really gain steam. I think maybe the price was around 12 or 13,000 on this date. And Peter Schiff says, Bitcoin is the biggest bubble ever. Then I guess what prompted him to say that is that gold drops to 7 ounces per BTC. Again, that was when Bitcoin was about $20,000 cheaper than it is today. And the price of gold has not gone up very much, at least. And here's one from back in 2017, December 21st. The price had just recently reached its previous all-time high of like 19,600, whatever it was. And I'm guessing the price was probably around 17,000 on this day. About half of what it is now. The title is Interest in a 1300 Yellow Metal May Torpedo Bitcoin Prices. And this video is titled A Gold Rally Will Implode the Bitcoin Party, says Peter Schiff. I keep saying shift. Peter Schiff. And it says here, according to Schiff, once the yellow metal really starts going up, it can be the pin that pricks the Bitcoin bubble. Oh, really? If I remember correctly, price of gold started going up a lot this past June. I think that's when it got over $2,000 and reached an all-time high. And back then, Bitcoin was around $10,000. Since then, Bitcoin has like more than tripled in price, and gold has gone down last time I checked. And then here's an article from November 12th, 2013. Bitcoin is Tulip Mania 2.0, not Gold 2.0. Colin Schiff. The Winklevoss twins may say that Bitcoin resembles Gold 2.0. Again, this was 2013, November 2013. That was around Bitcoin's peak of around $1,150. But CEO of Euro Pacific Capital and Peter Schiff says the somewhat mysterious online currency more closely resembles Tulip Mania 2.0. A bubble is a bubble, he said, and there's a bubble in Bitcoins. To me, it looks like a modern-day tulip mania, Schiff said, referring to the fantastic rise and fall of the value of tulip bulbs in 17th century Holland. Okay. One thing, well, what I heard was it was actually the government of Holland that created that tulip bubble, and the government definitely has nothing to do with the rise of Bitcoin's price. That's for sure. The reason people are buying Bitcoins is because they think they're going to make money. They think the price is going up, and the price probably will go up. Yeah. It'll keep going up until it implodes, and a lot of people are going to lose a lot of money in Bitcoins. Again, back in 2013, the price was under $1,200. He does admit the price will go up, but then he says it's going to implode. This was 9 years ago, right? Or no, 8 years ago. I'm sure this wasn't the first time he called Bitcoin a bubble, but I have a feeling he's probably going to be going to his grave calling Bitcoin a bubble.
It doesn't matter that the price has gone up. I mean, I've never said that the bubble couldn't get bigger or that the price couldn't rise.
So Peter Schiff never said that the bubble couldn't get bigger for Bitcoin, and he never said the price couldn't rise. Okay, well, let's take a look at a few more articles I found on the internet. This one is from August of 2019 from cointelegraph.com, quoting Peter Schiff. Bitcoin price will never hit 50,000. Gold bug Peter Schiff tells Tom Lee. Bitcoin came within just $8,000 of that price just earlier this month. It's currently at around $35,000, which means it only has to rise, about another 40% to reach $50,000. You know, when it does, I cannot wait for that day, and I can't wait for the price to actually go down after that. So when it does, I know Peter's going to run to Twitter and blast everyone who bought Bitcoin, talking about how Bitcoin's going to zero. And then I'm going to reply with this article, and I'm going to ask him to please predict that Bitcoin will never hit $1 million.
I mean, I've never said that the bubble couldn't get bigger or that the price couldn't rise.
And here's an article from later that year, November 2019. Peter Schiff, Bitcoin's price will never reach $100,000, but he never said the price won't rise, okay? Peter Schiff, a popular economist as well as a recognized author, recently said that Bitcoin's price will never reach $100,000.
I mean, I've never said that the bubble couldn't get bigger or that the price couldn't rise.
And this came from this tweet here. Rhythm Trader replied to Peter back in November 8th, 2019, kind of mocking Peter here. He says, Peter, in the future, Bitcoin dumps 25%. I told you it would dump. Bitcoin dropped from $100,000 to $75,000. I can totally see that happening. And Peter replies, keep dreaming. Bitcoin is never going to hit $100,000.
I mean, I've never said that the bubble couldn't get bigger or that the price couldn't rise.
And finally, from June of this year, this is definitely the best one. We already know he was wrong about this one, but it says Bitcoin price will hit $20,000 in 2020. Not even close, says Peter Schiff.
I mean, I've never said that the bubble couldn't get bigger or that the price couldn't rise.
In their June report, Bloomberg predicted that Bitcoin's price in 2020 could reach double of last year's high of $14,000. How much did Bitcoin end 2020 at? I believe it was just over $29,000, just under $30,000. Double 14,000 would be $28,000. I got to look up what Bloomberg's prediction is for 2021 for Bitcoin. But despite these predictions and increased reporting of institutional adoption, there's that word again, and even rumors that PayPal will begin offering Bitcoin sales to its 300 million users. Remember, this is from June of last year. Investor Peter Schiff says an all-time high will be achieved by gold, and he asserts Bitcoin won't even come close to hitting a new high.
I mean, I've never said that the bubble couldn't get bigger or that the price couldn't rise.
And here's the actual tweet. It started off with ZND Toshi replying to Peter Schiff and Max Keiser. Since gold peaked over 8 years ago, its price today is back to that level. Yeah, so it took gold 8 years to get back to its previous all-time high. I believe it took Bitcoin right about 3 years. While the price of Bitcoin has risen by over 150,000%, remember this is back in June of last year, I think the price of Bitcoin was around $7,000 or $8,000. So which one of you has been wrong over the past 8 years? Talking about Max Keiser, Peter Schiff. Max Keiser is a big supporter of Bitcoin. Bitcoin is in a bull market and headed much higher, yet you remain in denial. And Peter Schiff says, I'm just talking about the last 2.5 years. I was wrong not to buy Bitcoin 8 years ago, but anyone still holding it was wrong not to sell 2.5 years ago. He's talking about the peak in 2017 when Bitcoin peaked at a little over $19,000. Gold will likely make a new all-time high in 2020. Bitcoin won't even come close. And I actually replied to this tweet earlier this month. And I said to him, why were they wrong not to sell, Peter? And being a total smartass, I say, and what exactly did Bitcoin not come close to in 2020? So, of course, Bitcoin smashed its previous all-time high last month when it was still 2020. Peter Schiff, he adamantly stated that it wouldn't even come close to reaching its previous all-time high, which was under $20,000 actually.
I mean, I've never said that the bubble couldn't get bigger or that the price couldn't rise. My only point is that the price is unsustainable because Bitcoin itself has no value. It has no use. Yes, if people believe the price is going to go up and they're willing to buy it, well, the price will go up. But it only goes up if more people make the same mistake and are willing to pay an even higher price than the last fool. Well, eventually the supply of fools runs out and the greatest fool ends up as the bag holder. And maybe we're very close to that point right now. I don't know. I mean, I'm not clairvoyant, but I know a bubble when I see one. I got plenty of experience. And if it walks like a duck and quacks like a duck, it's a duck. And Bitcoin is the biggest duck of them all.
What if I told you this bubble is just going to keep getting bigger? Would you participate?
Well, it's hard to participate in a bubble when you know it's a bubble. Because it's if you don't know, well, then you can buy. But the problem is you never know when the bubble is going to pop. So it's difficult. There probably are. I mean, I think there are two types of people that are in Bitcoin.
What if I paid you? What if I said, here's a bunch of Bitcoin, can you manage it for me? You're a fund manager. Can you manage my Bitcoin? Would you participate then?
I would be tempted just to sell it as soon as I had it. So it's like, as I said, I think there are two kinds of people that are in Bitcoin. There are the people who don't know it's a bubble and don't know it's worthless. And then there are the people who do know, but they don't care because, the price is going up and they figure they're going to get out before the bottom drops out. But I think that's, it's hard to participate in a bubble when you know it's a bubble. As I said, I think there are two kinds of people that are in Bitcoin. There are the people who don't know it's a bubble and don't know it's worthless. And then there are the people who do know, but they don't care because, the price is going up and they figure they're going to get out before the bottom drops out. But I think that's a lot harder to do. People think that they could get out. But I think most people are going to be trapped. I think when it finally collapses, it's going to be very quick. And, the market has been conditioned, right? Every time Bitcoin drops in the past, it comes back, right? So they've convinced the hodlers to close their eyes and turn out the FUD. And so Bitcoin crashes and it comes back and it crashes and it comes back. So people now expect that every time it crashes, it's going to come back. So what happens when it crashes and then it doesn't come back? It crashes again and then crashes again. But people are stuck holding and hoping. Ultimately, that's what's going to happen. I mean, all the money that people make in Bitcoin is simply going to be a function of the money other people lose. There is no actual value being created by Bitcoin. You can only make the money that other people lose. That's the nature of a Ponzi or a pyramid. And that's exactly what this is. It's got characteristics of both rolled into one.
Okay, so this is really inaccurate. He just said himself, when Bitcoin crashes, it comes back up, and it's done that several times throughout its history. But with a Ponzi scheme, once the price peaks and then goes down, it goes all the way down to zero. It doesn't ever recover like Bitcoin always does.
Yeah. Well, okay. So you tweeted something very interesting recently, which I didn't know before, because everybody I talked to have told me that institutional money has been going into Bitcoin, and that's one of the primary reasons why the price has gone up. And I don't know if you agree or disagree with this.
Well, I think some institutional money has gone in, that some institutions that otherwise might be buying gold maybe are not doing it. I don't think they're buying Bitcoin either. Obviously, there's been a couple of hedge funds that have gotten involved, and a couple of companies are involved. But as a percentage of all the institutions that are out there, it's tiny. But I think that it is being blown out of proportion, certainly by the Bitcoin community that wants to highlight this to try to help drive this narrative that all the institutions are coming and so you better buy, right? They're trying to pump it up. I think CNBC in particular, because I think they've been bought and paid for by Grayscale, which is their largest advertiser. And so I think their coverage is completely one-sided and biased, and they're trying to spin this false narrative that all these institutions are buying into it in order to pump up the price. So I think the people who are in can get out. I mean, that is one of the things that if you are big into Bitcoin, you need to make a lot of noise. You need to be very public about the fact that you own it, and you have to keep touting it because you need to get more people in, because that's the only way that the price will go up. I mean, a stock could go up because the company does well, because their earnings are going up, because they increase their dividends, or a commodity could go up if there's more demand for that particular commodity because it's needed for something in particular. Like silver, let's say there's more demand in the automotive industry, or now maybe, in some certain businesses now need it more, or maybe there hasn't been as much mined. So there are different things that can happen with supply and demand. But Bitcoin, it doesn't generate any earnings. It's not used for anything. So the only demand comes from speculators. And so everybody who owns it has a built-in incentive to try to encourage more people to enter the market as a speculator. So everybody that owns it has to talk their book, and they have to attract in new people to buy.
Yeah, and that's just completely different from gold or pretty much every other market there is. Taking another look at this article, the bottom, Peter is quoted as saying, Bitcoin hodlers won't sell as they believe they'll get rich when Bitcoin moons. Bitcoin whales get rich by selling now to realize their paper gains before a market crash wipes them out. The whales must make sure the hodlers don't lose faith and cash out so that they can cash in. And then naturally, one of the questions that he didn't provide an answer for was if this applies to all markets, as it most definitely sounds so. Yeah, Peter talks about Bitcoiners making a lot of noise. Actually, Peter Schiff makes more noise about Bitcoin than almost anybody else on the planet, but he also makes a lot of noise about gold, and I'm pretty sure he wants more people to invest in gold so that he can sell his gold that he bought at a higher price. I mean, I remember once on Twitter he was talking about this. Oh, people are just trying to pump up the price so they can sell it at a higher price. And I sarcastically replied that, oh no, I want to drive the price down so I can sell at a lower price. Why on earth would anyone want to sell at a higher price? I mean, that's how pretty much every investment works.
My final comment on Bitcoin, and we'll move on to something else, doesn't that, what you just said, doesn't that simplify the equation for you? Because if all it is a demand-driven product, and you know that there's a big number of people, like a large community of people who would almost religiously buy into this product. That's all you need. That's a bull case right there, isn't it? Because they're not going away anytime soon.
Well, it depends. They're buying into a dream. It's a myth that you're going to get rich simply by hodling Bitcoin. Now, yes, people who did buy Bitcoin early on and rode it all the way up, they did get rich. The people that get in early are the ones that get in rich.
Yeah.
It's the people that get in late that enable those riches that get out poor. Now, there are a lot of people that think that buying now is still buying early. This is preposterous. Anybody who thinks they're getting in on the ground floor or anywhere near the ground floor, as a percentage of all the institutions that are out there, it's tiny. Now, there are a lot of people that think that buying now is still buying early. This is preposterous. Anybody who thinks they're getting in on the ground floor or anywhere near the ground floor, everybody knows about Bitcoin. Everybody's talking about Bitcoin. So you're not stumbling in on something brand new. As a percentage of all the institutions that are out there, it's tiny when you're buying it now. I mean, in fact, I was watching on the CNBC yesterday, and just about every single anchor all day was convinced you got to buy. You can't lose. Even if the price goes down, it'll come back up. It's a no-brainer. Buy it. You're all going to get rich. So this is how bubbles end. This is not how they begin. We're much closer to the top than the bottom, not only in price probably, but in time. I mean, this is like a parabolic. Look at that move up that we've had, right? I mean, this is not a sustainable move. There's never been a market that's moved up like this that hasn't come crashing down, including Bitcoin. Look what happened to Bitcoin in 2017. It went way up and then it was down 70% in 2018. I think the odds are much better that we have a big drop in 2021, like we had in 2018, than another big move up.
So Peter thinks it's much more likely for us to have a year like 2018 where the price went down than it is for the price to go up. Well, let's take a look at this chart from 5 months ago of yearly candles. This is last year, but this is from 5 months ago. If this were made today, the candle would be much, much bigger. But anyway, you can see we've talked about this before. In Bitcoin's history, it's only had 2 down years, so not sure why Peter thinks we're going to have a down year next year. And then, as you can see here, this was the halving that took place in 2012. This was the halving that took place in 2016. And the year after it, look what happened. Price skyrocketed after the halving in 2012. And after the halving in 2016, price skyrocketed. And now we're in the year after the year that had the last halving. But Peter Schiff, for some reason, says we're more likely to go down than go up. What do you think? Is it just me? Or is that just complete insanity? But anyway, I think that'll do it for the video. It's kind of a long one already, so I'm going to let you guys go. Hope you enjoyed it. And I'll see you next time. As they say in China, Zaijian, and remember, it's better than keeping it in the bank.